All right. Well, happy Monday, everyone. It's definitely time for a another weekly update. Back in the States, it is good to be home. I love going on vacation. I had a great time in Jamaica, but my vacations tend to be more active filled than restful. So flew in yesterday and gotta say I just crashed out the rest of the day. I haven't even unpacked my bags yet. I've just been cleaning up a little bit, getting some things ready, and wanted to dive right back into the charts because it has been since last Monday when we were here. It's been one heck of a week, right? So, pardon me, I always get a cough or some kind of congestion on the plane. So if I cough a lot, you'll have to forgive me. Um, you can see though that long term, these upper range targets that we have talked about, our targets for our little step up longs here, running this bullish wave. We are now in that zone. So if you got on either of these, lock your target, lock your profits in. If we roll from here, this wave five could be over, and it could be a substantial drop. Uh, I on that note, however, I am not shorting. I've got nothing, nothing that says that we're tipping over yet. If we do roll over, it's going to be one of those flash crash scenarios. And look, I can't plan on those. Like this, that the daily looks super bullish. We'll even start on the weekly here, right? Let's go to the monthly. Monthly has, yeah, nothing but green. I mean, we're in price discovery, brand new highs. There's nothing above us other than target levels, target zones, possible target fibs. And you don't, at least I'm going to say, I'm not going to set limit shorts on any of those levels. For me, I need to see reactions to something I've set up or planned far in advance. And I had another level here at about 82.5 that we blew right through. So I've got nothing left. Nothing left until we get up here to about that 100,000 level. My theory, though, is that we come up and we form a range. Now, this range that we're in, and back on the weekly, again, you can see nothing but bullish structure, nothing but indications that we'll continue higher. We looked at the daily, we were looking at the 4 hour rolling nicely. I mean, you can see divergencies all over, but you're going to do that, especially in these smaller time frames. I would say our most relevant ones, well, the weekly, we can start to see some overbought, but not a lot. I mean, we're not in extremes. And since we're still moving up and we still have plenty of volume, I could turn the volume on, take a look at that. Volume is very strong on this rise. So there's no volume divergence. It's just momentum oscillators moving up into that overbought territory, but we're not even extremely high on the weekly. Uh, with this level of move, the daily is less significant. Even that's not too extreme. We can go into the 4 hours. We can look at the oscillators. Again, they're starting to get divergence on 4 hours, but it could trail sideways for a while, and that could roll those down without even having to drop. It could happen, in the overnight trading session hours, for that matter. Look at this even here on the hourly, right? We're rolling, but look at all that volume, right? Just all that volume, just continuing to go up. At this overbought on these smaller time frames only applies in ranges. When you're up here in this price discovery stuff, all of this really only applies in ranges. Don't think that that's going to give you that short signal with momentum oscillators. So hourly is as small as I'm going to go because it gets ridiculous after that. I don't trade smaller time frames most of the time. Really, at this point, I just see more momentum and strength. Still looking for more upward area. Let me pull up a different chart. This one is my wave chart, I believe. And on the wave chart, what we're targeting for an ideal minimum wave five for me is be right here at 89, just under 90,000. We hit about 90,000. We'll take a look. I think we extend all the way to the 205, about 25, 890. And yeah, I think that's it for me, guys. Like that is as that's where I'm going. Even here, we're like dead in the middle of this. Uh, just our common retracement levels here. I still think 89.5, 89.4. I think that's going to be maybe an area where we hit some slowdown. I don't know if it's going to stop there. We might get at least a decent retracement. Maybe we could stop for a minute, form a range. Doesn't have to be a huge range. It can just be a range with a few candles. Like you look like this range here, right? That gave us some areas for reentry. Gave us some areas to decide if markets were going to move up and down. We had ranges here. We had a range here. We had ranges down here at the bottom. We had range, right? Then we broke down under it. We came back, made another range, turned this whole thing into a huge, long range wave four, which, we took a lot of trades in. And at the time, I think, like I mentioned, that anything under 60,000, right? From here, say, yeah, anything under 60,000 from here below, that was prime time buying opportunity. And so even if I wasn't trading, I was buying down in 60. And so everything I bought in the prior ranges, including the lows, is up phenomenally. Even everything I bought most recently here under 60 is up phenomenally. And when we form a new range, we can make a new buying range, and then we can continue to see if this is going to continue to rise. I think it will. You know, we may or may not make 100,000. If we do, I'd be very happy, very excited about that. If we don't, we form a range and we come back down. Let's take a look. Let's say we do hit the top here. We bounce for a while. We come down, right? Maybe come test down, test in here, and then continue up. Maybe that gets us over, for our next run. See, even if we do something like this, right? That'd be fine. That'd still be very bullish structure, right? Another higher low from here, another higher low from, maybe somewhere down in here. It doesn't even have to be that deep. It could just be down into here. And that could give us, another entry point. We can continue to roll up. I don't think this is over yet. Time wise, I think we are pretty good into 20. I'd say we're pretty good in 2025. And then maybe another year or so beyond. It's hard to tell, obviously, but I don't think this run up is quite done yet. In the immediate time frame, it has given no indication that it's done yet. So I'm not shorting this, not yet. Like I said, not until it gives me a range or a reason to do so. I have no reason to short this momentum. Like I said, the volume's here. The price is continuing up. It keeps getting bought up on every sell, every drawdown, and it has been honestly since September, right? So we hit our bears September month, and I think it just decided that was fine. Look, it wasn't even the worst. What we came out of August, I think was probably worse in August, and that's when we hit our lowest peak here, about 49,000. We shot under a little bit, just under our little support box here. Then we came back and almost tapped it for support a second time at the top of the range, and then rolled up from there. So here's hoping that you either had some holds or held on to some longs, and if you have, just like I said, force a little profit out of them, keep the stops in in protected areas, and just hold on, man, because they're going. Like I even have a good amount that I bought um, in my large portfolio using FBTC. They're the Bitcoin fund. Gosh, I can't remember what they're called now, but yeah, even have some in there. It's doing fine. I'd rather hold actual Bitcoin, but sometimes you would just diversify a little bit. I thought I'd get some ETF. That's what I'm looking for. My brain's still full of water, I guess. All right, back on what natural gas. We talked about that having found good support down in this range, and it did, and it has shot back up. So to those of you who bought natural gas, kudos. It should be pretty well in profit now. TMF has struggled. Yeah, so that was our hedge play. I was expecting that to struggle. I gave warnings not to leverage TMF because it is a fickle mistress, right? But I'm happy to buy it. So it fell, but it's not falling apart. It doesn't have far to go, guys. There's not much left to fall out of it. I may remove that for now. That feels out. So again, excuse me. So yeah, is TMF? Is it time to quit? Should we cut? Should we cut? Um, should we even cut trying to buy out these hedge funds and just run with the bulls? Well, I mean, look, that's up to you. I always like to have a little bit dipped into the hedges just in case. Qs have finally come up and broken over their highs. We got the SPY going. Look, I feel like we called this one pretty well too. Eh, we looked; it was coming down. This was another low, but it was a higher low, and we should come back up. I am aiming at this hop pretty high. I'm eyeballing this level right about here, 618 to 626. At that point, I'm going to look for signs of resistance, signs of a correction, and if we don't get it and we shoot through, then what we can do is we can remove this guy right here, this guy off the chart. We can get rid of this target zone. We can finally get it off the chart. And I'd be happy to do it. I prefer an up market to a bear market. I'll take that any day of the week. I like to know how to play a bear market should it happen. Right now, price action and I'd say both price action and technical indicators are not giving me any signs that we are in or starting a bear market just yet. So, got no major shorts. All we could do was, put up levels and wait for that reaction and then see how valid these are. And these were valid patterns on both the SPY and the Qs because they got our initial reactions. But just because the pattern is valid doesn't mean it plays through every single time. That's what waiting is for. And we did make some plays in the range, some down, some up. And some of them were successful. I think we had a couple of fails on them too. But look, that's why our successes have higher and lower limits to where we take profits than where we take smaller losses to make sure that we protect ourselves against being wrong. I think overall we made money on both of those indices, so can't complain too much. Let's head over to the orange list because we're going to go over some factors concerning Bitcoin. We'll get back on topic with the biddies since that's the one that's moving the hardest right now. And this is our Bitcoin dominance chart, and I pulled up our target that we've had, which is the 618 for its dominance here. We were looking at least 60%. Now we hit that and exceeded it just by a little bit, not a full percentage point, but a little bit. And I feel like we could flirt here for a little while. It looks like it's coming back. I expected to flirt here for a while. I think that with the alts starting to get a little more traction, that they could start to look a bit more attractive. We should start forming more bullish structure on altcoins. And as you start to see that, especially on altcoins that have already maintained bullish structure through the past year or two, you're going to start to see them do very, very well. But they're not really going to all come into their own until we get another dive in Bitcoin dominance. And that becomes a fever to run in altcoin, and altcoin production doesn't necessarily coincide with a fall in Bitcoin. Bitcoin was all-time highs, like right here, some prior all-time highs. It's just that the altcoins run and go like mad gangbusters. Um, but I don't know if we're quite there yet. We're at the top of the channel. We're at double resistance. This is definitely an area to watch. And if we start to get, Brendan, uh, I need a better tool for this. Oh, let's try them. Let's try the brush. Let's try that. Right? He does his M patterns, the same idea, right? We come up, we make that M pattern, and then we come up a little bit lower and come down. Maybe that gets us to the bottom of the channel and we space out a little more. Maybe we shoot back up. I'm also looking between 65 and 66%. There's another possibility up here, but I don't know yet. I mean, we're every cycle that we enter for these is a little different from every other cycle. So it gets difficult to predict on prior performance, especially on something as I know a lot of you guys don't think this is young. Maybe it's just because I'm old, but something as young as Bitcoin, because in the grand scheme of things, I have a lot more data on a lot more markets than I do on something like cryptocurrency, which at least for me has not been around a lot. We haven't seen a lot of cycles with it, so every cycle has been a little different, and it's that makes it difficult to find the consistency in every single cycle. And I honestly, I wouldn't trust a double or triple consistency because it's just not off enough, um, not enough control in that data for me to trust it fully. So we're just waiting for this channel to either retrace back to the bottom of the channel or to come back and finally break out the top and run up into our next resistance level for Bitcoin dominance. I don't think you're going to see the altcoins really run until this Bitcoin dominance finds its top to roll over. It looks like it's trying to go there. Like if I were running a stock off of this is some trickle up, right? Just slow trickle up. We've not moved impulsively for a while. And when a branch grows out like that, it tends to break. Same with downward slow branches like that. They can break up real fast. These slow crawling up branches can break down real fast. It, I know this is not a stock, but I don't have any other way to compare it to another chart. So I treat them all like stock charts. What else do we have in here that's worth looking at? Let's take a look at the totals because we have total three. Now, total three is the altcoins excluding Ethereum and Bitcoin. So these are all the smaller capped altcoins. Although honestly, I don't even know if Ethereum is the second largest one anymore. Maybe Solana took over. I really don't know about the cap dominance. So I'm just going to go on these two because they're the ones I had, the ones I've tracked the longest, and I still think the altcoin market is going to run up into this range. I've had this target range up here for a long time. We came real close. We broke under the trend, and now we've broken back up and out. So we found support here on our 50s, our median line on the weekly. Um, and we found support on our channel when we came and dripped down into here. Man, what a time to buy alts. Not all of them have done well, but at least all of them have stopped. Most of them, I would say, at least most of them had stopped bleeding severely. So we've been in coin accumulation. I think we're still in altcoin accumulation. I think there's another spike in total three waiting at some point to happen to break this high. It's either that or altcoins fail somewhere up in here and they never return to the highs, and that's it. Altcoins become a thing of the past. Um, so you either believe in one more run at least, or that altcoins are done. Um, as far as total market cap is doing the same thing that Bitcoin is. Total market cap is 1, 2, 3, 4, 5, and it's just rolling up through five. I think total market cap altogether will break its highs. Now, Bitcoin dominance going to 60% would mean that this goes without this. But if we find resistance where we're at now on the Bitcoin dominance chart, it means that we still break a new all-time high with our wave 5, and this can run up into our resistance zone. I feel that more likely. I think that it's going to be pretty. It's going to be pretty pretty exciting in high times. I think the euphoria is really going to break in, and the markets are really going to scream. And I don't say that often. I'm usually fairly pessimistic, but I gotta say I'm feeling pretty good here on the market. We're in that time of the month. It's an election year, and regardless of what candidate you support or wished had won, the markets are glad that the candidate that did make it is in office. And there's probably more than a few reasons for that. One, like if you're into capital gains tax, the guy was probably your pick for capital gains tax. I'm going to mention any other policies or politics of the moment because I think that was one of the largest ones market wise. And I'm just here to talk about the market. And two, transition of power. Had he not won, I think the markets would have sensed the fear and unease that there would be um, another disruption in that transfer, that peaceful transfer of power. And nobody wants an unruly and belligerent uh, major market, right? That it becomes unpredictable, it becomes unsafe. And right now, with everything else that's going on in the world, just a little safety and security is a lot to count on market wise. Um, I think that's going to do it for now. I'm going to have to wrap this up. I'm going to run out of time. I have these crimped down to 30-minute windows, and then it's got to stop and start all over again. I hate patching videos together. I know. I need um, another video recorder software, but I just figured out how to use this one, and I'm not really keen on learning to use another one. I'm here to train, not make videos. Um, but thanks for letting me do this as a side gig anyway. Appreciate you all. Um, and I will see you next week. Enjoy the ride. We'll put up some thoughts and ideas later. Right now, I would say just keep buying pullbacks. Just don't don't fight that trend. Please don't be the guys who are getting liquidated because I watch this happen. It's been every day for almost the past 5 6 days now. That everyone every time I look at the liquidations charts, there are people shorting this. There are people still shorting this. There are people who short it today, and the liquidations continue to pile up, and it's only going to feed that pump. So don't be that guy who's throwing their market at the hopes that this is the top because it will give you signs before you get there. All right. Anyway, I'll talk to you later. Bye.